Hello viewers, in this video we'll be going over silver futures. In this video we'll be going over the day-by-day probability for silver, how we find the models, and where silver will head to in the next coming days. Again, this model is now available in the link below, so do check it out. So back to technical analysis. Today we are up 2.9% on the 1 hour chart. We are approaching positive MACD. We are currently overbought on the RSI. If we extend out to the 4 hour chart, we start to see a convergence in shape, and we are still in negative MACD on the 4 hour chart. If we expand out to the daily chart, we still are approaching to negative MACD. We see a slight convergence in formation, however we have not reached it yet, and we still, in order for this slight downtrend to reverse, we need to have a large candlestick that overlaps or overshadows the candlestick made back in January 28th. That will be a very bullish reversal. And if we were to head down lower, I do see a possible support level around a price of $17.24. That coincides with past resistance that dated back between November 26th and December 4th of last year, and that also coincides with the 150-day moving average, this red line. And if we do manage to head up higher, the next resistance that I see is the one made back in January 7th around the price of $18.45. So if we were to head on higher, that price movement is roughly around 2.6% to the upside, and to the downside is roughly 4%. So back to the day-by-day probability model. So what we have here, as the day progresses, we see a slight favor to the downside, not in favor of the upside. There's 0%. However, we do see a 0 to 5% chance, or 0 to 5% increase for silver with a 29% chance. As for to the downside, we have a 43% chance of reaching between 0 to negative 5% and a 29% between negative 5% to 10% down. So let's head to the forecast for silver. I'll go day by day where silver will head to in the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. This trend dates back to November 20th, 2018 to January 29, 2019. So let me point out why these two charts are similar. So what we have here in the current trend, we start off slightly below the middle Bollinger Band, and then we proceeded to reverse and touch the upper Bollinger Band, and let's just mark that as green. And then next we see a dip and touch the bottom Bollinger Band right there as well. So we have those points. And then trend in question, we see it take a slight dip below the middle Bollinger Band right there. Next we see a reversal, touch the upper Bollinger Band. Afterwards, we see it touch the bottom Bollinger Band right at the end. So we have those points there. So what we have is 1, 2, 3 points. We also have 1, 2, 3 points. So there's reason to believe if the trends and patterns are the same, the outcome and forecast should be fairly the same. So the model that we just examined was November 20th, 2018 to January 29th, 2019. Back then, silver was down 88 basis points, so not much to the upside and not much to the downside. And if we head back to the day-by-day probability model, that also coincides with the 43% chance of it hitting in this standard deviation between 0 to negative 5%. So again, this model is now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.